So I was very confident back at the end of 2024 about what the company was doing, what we were executing on. And we're in that period right now where we're being audited. We've got our 10K coming up, but yet management and myself are very, very confident in these numbers. So I wanted to put them out ahead of the annual report that's going to come out.
Hey everybody, it's Stuart Smith at smallcapvoice.com, and welcome back to another online business briefing where we shine a spotlight on some of the smartest and freshest plays out there in the market today. And we're excited to be welcoming back our client. USAQ is the ticker symbol on the OTCQB, and that is for QHSLab Incorporated. And specifically, we're going to be talking to the CEO today, Troy Grogan. You've seen a lot of videos on YouTube in our recent part 1 and part 2 with Dr. Marcos Sanchez Gonzalez, but I want you to tune into a couple of press releases today. So let's get in the time machine. Let's move back 2024, November 14th, headline, QHSLab reports Q3 2024 revenues. Those were record revenues, reflecting accelerated expansion in digital health and allergy diagnostics. Now, we talked back then to Troy, and he was already foreshadowing big things coming in 2025. And so now we're going to look back at Q4 2024. So with that, let me bring on to the show Troy Grogan. Troy, thanks for making time for us, and thanks for waiting patiently as I ramble on how wonderful your company's doing.
Oh, I love hearing your voice, Stuart. So it's great to be back. Thank you.
Absolutely. Well, that headline, and pull this one up as well. Here's the dateline, February 18th, 2025, QHSLab Incorporated reports record revenue growth and positive net income and preliminary Q4 and fiscal year 2024 financial results. Now, this is the type of press release that really should stop the presses. We have had a tumultuous start to the 2025 year across the board, and I'm talking socially, politically, economically, macro, micro, all kinds of things. We've seen so much happen to the big boys, to the major big cap stocks, large cap stocks, that we've sometimes missed headlines like this, Troy. And there is so much to talk about here. 4 consecutive quarters of year-over-year revenue growth. Revenue surges again 98% in Q4 2024 compared to Q4 2023. Operational efficiencies, which we touched on our last interview with you, and strategic execution drive first profitable year. Let's talk about these numbers. Let's get your insight and your color on this, because again, there's a lot to digest here, and sometimes these are the press releases where we need a deep dive from the CEO to really give us the perspective on why this is so important for you and your company, Troy.
Yeah. Like if we all had a crystal ball, that would be fantastic. Luckily I sit in the chair of knowing what might be a little bit in the future. So I was very confident back at the end of 2024 about what the company was doing, what we were executing on. And we're in that period right now where we're being audited. We've got our 10K coming up. But yet management and myself are very, very confident in these numbers. So I wanted to put them out ahead of the annual report that's going to come out on deadline or before deadline. But yeah, what was fascinating for me was to see that 100% growth in that Q4 against the Q4 of 2023, because the seasonal impacts of being in the healthcare environment is that's a slow quarter. It's just the nature of the industry. People are on vacation. There's certain holidays in November. There's certain holidays in December. But to see 100% growth, that's telling us that our business model is working. We're getting more income per client, and we're doing that with the same resources pretty much that we had in the same period a year before. That to me is exciting. That's what's showing the potential for this company.
Well, it's absolutely exciting, Troy. And I don't mean to cut you off, but there's a lot of ways to look at your company right now. From the technical standpoint, we've seen a breakout in your stock from the end of 2024 to current times. We've now seen consolidation and a foundation built at a higher price point, which is terrific. That's what we want to see. But operationally too, beyond just the numbers and the fundamentals, operationally, and this is where I think people get lost, is they want to see revenue. They look at the numbers, they look at the financials, but they don't see things like surpassing 100,000 completed digital assessments. That's huge for your company. The grant funded research, that's big. That's all in this press release, everyone. Again, February 18th, please pull up this press release while we discuss it. I know you had another thought there, but operationally speaking, you guys are hitting your stride as well.
Stuart, you just said 100,000 assessments completed.
Mm-hmm.
It's now 130,000 assessments completed.
Outstanding.
Data is the new oil. We know that. Data is the new oil. We own the data. This is massive. This is a major, major competitive advantage against anyone coming in, that we already have 130,000 real human records. That just feeds into our R&D. It feeds into the future. And operationally, you say, well, we're 65% gross profit margin off a small base. Like, where could we be based on where we're at right now? $2.1 million of revenue in 2024 compared to $1.4 million of revenue in 2023. The scale is there. The platform is built. And that's why I'm so excited. You can hear me like edge of my seat kind of stuff. So it's good to be here in March of 2025. About to talk about, maybe in a few months, if you invite me back, what we've done in the first quarter.
Well, absolutely. And of course, you're always welcome back, Troy, because it's so fun to talk about this, because there's a lot of different verticals within a company that seems to be in a niche space. And that, to me, those two things are sort of contrary to one another, having multiple verticals in a niche space, but you're serving these providers. And let me go back to these videos we've done with Dr. Marcos Sanchez Gonzalez. I apologize, Marcos. I need to start just calling you Dr. Marcos to get that out a little bit better. Anyways, these videos, we've touched on a brand new tool. I guess I should give this out now as well. QHSLab.com. Go to that website. I want you reading the press releases, but I also want you to go over, click on the assessments tab. This is where we've been talking about this with Dr. Marcos, is this mental health assessments. This is a new tool for your company. We've gotten his take on it really quickly. Let's get your take on this and the market potential for this as well, since you're the CEO.
It is new, but it's an iterative part of the tool. So Dr. Marcos would have been talking about recently our suicide severity rating scale, and how we're able to identify people that are not just thinking about self-harm, but actually, have the tools to carry it out. And that's the alarming part. And that's what we need to stop. Now, one of our goals is zero suicide. I mean, that's a big goal, but zero suicide. So you got to be able to identify people at risk. And that's a new part of this. And it's happening in primary care. And Marcos would have said that, 40% of suicides actually, they see their doctor in like 7 days or 14 days beforehand. So we need to give tools to primary care doctors to identify people that may be thinking about and may have the tools and may have tried in the past. And that's part of this. But we have so many other instruments and ways that we can help a primary care doctor identify risk and help their patients, especially those patients that want help. That's what we do. We help identify risk. We help patients that want help. We do this outside of the doctor's visit as well as in the doctor's visit. So we amplify the opportunity that a doctor has maybe 3 or 4 times a year. That's all they have for 20 minutes, maybe 60 minutes a year to impact a patient's life. Well, we amplify that across the whole year for a patient. And that's another sticky factor. You think about this from a competitive advantage point of view, right? Where let's just say that for some reason, a practice, for whatever reason, says, oh, this is not working, even though they're making lots of money. But imagine if they've got 2,000, 3,000, 4,000 patients involved. They've downloaded our app, they're using it, they're having success, they're satisfied. They don't want to switch. Imagine changing their patients that are on a successful program. So we have like this switching effect, like where it's going to be so hard to switch from QHSLab. We're early adopters. We're first to market, and it's going to be, and we've got 130,000 odd assessments, and it's going to be difficult for our customers to want to switch because their patients are enjoying the experience. So again, early stages of 2025, but I'm excited.
You're definitely excited, and it's exciting again to speak with you. And one of the things we brought up at the outside of this was the operational efficiency, the management effectiveness. We see that readily in this press release again by the flip-flopping of a net loss to net income for Q4 2024. We also see gross profit increasing, which means you're lowering your burn rate. You're being more effective managing the dollars that you have. One thing we haven't talked about, and let's talk a little bit about this from the management perspective on the balance sheet side of things. Looking forward in 2025, liability reduction, increased revenues, these are things that obviously are going to be on the forefront for your company. But asking you as the CEO, is there a sore spot for you that you want to see eradicated, or are you now at peak efficiency? And I know it's tough to say that, and we're all humble here, and we don't want to say, well, there's always room to improve. But tell me where you're at right now in your mind.
Look, I and my team are very disciplined. We have been since inception, and we'll continue to be this way. This is the company ethos. So we want to make profit. That's our goal, right? We want to grow revenue, we want to grow market share, but we want to make profit. As we stand today, we do not burn cash. We do not burn cash on $2.1 million of revenue. We're actually servicing our convertible debt. The goal is, of course, to replace debt with equity. And that's what we're doing right now. We're working through that process. So that's a goal. Is it a sore point? No. It's a part of getting to where you're at to go to the next level. Exchange debt for equity. We're not burning cash. Apply that cash flow that we're currently spending on debt servicing to growing market share. And it's quite clear how we're going to do that. And again, I say it again, I'm excited to be here because I've lived through that whole development with the discipline of the team to get us to where we're at, this inception or inflection point, I should say.
Yeah, it is an inflection point, and I appreciate that. And before I let you go, let's go ahead and give you the soapbox moment where you can speak to not only your investors, but potential investors, viewers of this program. What would you want to see from the company? What are some operational goals, I should say, 2025? What would you like to see? You've already moved from 100,000 to 130,000 on these completed digital assessments. You own the data, as you said. You've got these sticky points with the doctors, which you're right. Why would they want to put their patients through something that is somewhat traumatic, the switching of all this around? So what do you want to see from your company here in 2025? What should we expect?
Oh, don't give me a soapbox. Okay, so 250,000 potential customers, 250,000. We have 100. We're generating $2 million. From 100, that's 20,000 per doctor per year. There is no reason why we won't increase that to 25,000, 30,000. We have more services coming in the pipeline. They're happening right now. So 1,000 from, 10 times, big jump, right? But out of 250,000, that's like nothing. 1,000 is 25 million, 30 million, 40 million. We already have gone through the hard work of getting the first 100. That's the goal. It's to just accelerate the number of customers that we have so that they enjoy the products and services that we're delivering to the current 100 with all the learnings and experience we have at the same gross profit, if not incremental gross profit margin improvement, which we expect. It's a digital product mostly. So that is the goal. And it's just like I said in the very first interview, block and tackle, right? It's just block and tackle. These doctors are out there and they want help. Independent primary care, small group practices that need improvements in their own practice revenue, and they want to help their patients with preventive health and population healthcare management. And that's what QHSLab's all about.
Outstanding interview, and I'm going to leave it right there. I think it's a company that, boy, wouldn't you like to be a salesperson for this company? I don't know if you're hiring. I guess I got a pretty good gig over here, but I mean, you talk about that. You're really, I won't call it crumbs because 1,000 from where you are is substantial. You're right, it's 10x, but it's so achievable, it's so doable, and you're offering something that they want at a price point that you've already figured out. We've got a penetration pricing model, so that's outstanding, Troy. Thanks for making time for us here at Small Cap Voice. Great interview. We wish you best of luck here in the next few weeks to months until we speak to you again.
See you very soon, Stuart. Thank you.
Thank you. Well, leave some comments for us. Leave some questions for us. Hit that subscribe button. Hit the like button. We so appreciate you here at smallcapvoice.com. And I know Troy would love to hear from you, his shareholders as well. So for Troy Grogan, CEO of QHSLab Incorporated, traded on the OTCQB under the ticker symbol USAQ, this is Stuart Smith saying thanks so much for listening and watching.